All right, ladies and gentlemen, we're hitting the key levels we talked about since December 4th. 3,900 to 3,700 is roughly where I thought the S&P was going to land, and I said we can overshoot to 3,500. We're definitely approaching those levels, and we're going to get into a lot of different things today, including bubbles bursting. Let's get into it. Before we get into it, I want to review what happened yesterday. I made a video kind of just poking fun at some of the bigger YouTubers out there, and it's not to diss anybody, it's not to offend any of my viewers or anybody else that follows those people, but you have to understand that since December, guys, I've stated there's going to be a market crash. 2022, stocks will crash. You have been warned. How bad will this crash be? So I'm trying to get in front of the viewer that actually cares about the economic backdrop and how this is going to impact stocks. As since December, guys, we've talked about a market dip between 3,700 to 3,900 on the S&P, okay? This was at levels at 4,800, 4,600 when everybody thought we were going to break 5,000. What gave me the signal? Well, we started the tightening process, guys. That is the end of a business cycle. High inflation. We had a decent market pullback. We formed a death cross. We had interest rates starting to creep very high. And all these things were signs of definitely more downside risk coming. Even a few days ago, I stated we were going to hit 3,900 when the S&P was at 4,200. Okay. So we're definitely going to go lower here. I'm going to go over the technicals. I'm going to go over exactly what's going on and how you can kind of protect yourself. If you haven't been following my channel since December, I don't recommend selling anything at this point, as we could have some serious relief rallies that might be the opportunity for you to sell out of positions if you're not convicted in them anymore or fundamentals have changed. But I'm not recommending buying or selling anything at this point. So guys, I went live late last night as I noticed on the option charts that the calls and puts were actually getting closer together, which was a sign to me that people were positioning for a relief rally. And I stated that we could have a relief rally if inflation reading comes in a little bit better than expected. Well, unfortunately, inflation came in higher than expected. Guys, the biggest problem with this inflation reading wasn't the total line inflation, in my opinion. What's scary about this inflation is food at home groceries are up 10.8% year over year. Okay, energy prices are up 30.3%. That to me is what's concerning, okay? That is concerning because people that live on fixed incomes right now can't do anything about that, especially if they can't go out and get another job, okay? So this is what's concerning, and I believe this is what's going to be the driving factor that could head us more into a recessionary type mindset. People are taking on more credit debt, and what's the problem with credit debt? It's a higher interest rate debt, and with rates going up even higher, we don't know how that's going to come out either. So there's definitely some economic data here that's starting to get concerning in my opinion. Now, I've stated this, guys, all the way back since December. I've talked about inflation being here a lot longer than anticipated. I talked about affecting consumer spending when consumer spending is 70% of this economy. A lot of big things, guys, that are coming up here. And I said you don't need to rush to stocks. You need to build cash, and you need to get the heck out of the way of companies that are not profitable. As my thesis is a lot different from the other YouTubers' thesis. So I'm trying to help the people that actually listen and digest the data without being biased. So if you're biased and you like somebody and you don't want to hear anybody else's opinion, then this channel is probably not for you. But if you're open-minded and listen to what I've been saying since December, everything has happened and then some. And if you did not watch my live stream last night, feel free to watch it, guys. It is free. I went over the upside of this market and the downside of this market on CPI reading. It seems to be pretty accurate to what is going on today. In that live stream, ladies and gentlemen, I stated that if CPI came in hotter than expected, we could see a S&P 100 approach 3,700. And I stated if CPI comes under expectations and it looks like inflation is definitely under control, we are going to see the market have a relief rally right up to 4150. What happened? Well, inflation came in a little hotter than expected. So even it seemed like we had things under control, but if you read the total inflation page, as I broke it down, food and energy costs are going up, and that's going to hit the consumer more than anything else. So that is why we're seeing the reversal in today's activity. If we don't close above 39.50, I think we got more downside risk, as I stated, to that 3,700 mark. If we break above 39.50 and start approaching 4,000, that has been a pretty good technical support level for the S&P 500. So we've talked about capitulation, we've talked about bubbles bursting. When I said capitulation needs to happen, I said Apple and Microsoft need to start participating in this capitulation in order for it to really start coming to an end. Those are major companies that carry a lot of weight in a lot of different indexes. So they need to participate if we're going to have true capitulation and a true pullback in this market of about 20 to 25%. And what is happening today? Apple just broke 150 today, and Microsoft is below 275. So these things are starting to come together. So we're having a lot of positive signs here. The next thing I want to take a look at is the VIX. We need the VIX to start getting to more heightened levels here in order for us to get. So here's the concerning part, ladies and gentlemen. The VIX is not at extreme levels, which tells me that there's not enough fear in this market to really call a bottom. So I do think there could be some more downside risk here. You want to see the VIX break above that 36 mark, start approaching 40. That's max fear. And along with that, you want this selling to kind of continue. Prices getting a little oversold. And honestly, guys, right now, it still looks like there's a big move still left in this VIX. So for those reasons, I don't think the bottom is in yet. I do think 3,700 seems to be an appropriate pinpoint. Now, mind you guys, I'm not saying you need to time the bottom here. If you've listened to me since day one, I've stated if there's good value in front of you, you start buying good value. But on top of that, I've also stated you should be overweight indexes, okay? And that's where you need to be. A well-diversified index that pays a dividend is what you should be overweight in this market. And I said you should start buying these indexes when we get to these max fear levels. And we've definitely been in some of those max fear levels, right? I think when we started approaching 4,000, that would have been a good time to nibble at some indexes and some of your favorite stocks. We break below 3,900. That's going to be another great time to start averaging in. If we hit 3,600, that's going to be another great time to average in. And you don't need to time the bottom here. As I stated before, guys, without the government backing us up and we're not going to get a V-shaped recovery, in my opinion. When you look at what GDP is doing consecutively from 2022 all the way to 2024, what is it doing? It's coming down. Not only is it coming down, but the Feds keep coming out and readjusting numbers as we've had negative GDP last quarter due to trade, okay? We have the SEC stepping in to align SPACs more closely with IPOs. So what does that tell me? Well, we were flushed with stimulus and liquidity, and the big banks definitely cashed in on that, underwriting all these SPAC deals with ridiculous valuations. They took the money from your pocket and they put it in theirs with no risk. So that is what's happened, and this is why the bubble's bursting. If you want to throw crypto and all the coins that went public over the last 2 years in there, you might as well, because those are asset classes that are bursting as well. So I just wanted to tell you guys this, as we've been talking about this burst of a bubble coming a long time ago, and I've tried to get my content out there. I've tried to make it entertaining, and I've tried to make it informative. Guys, I've given you the blueprint. The blueprint is, do not try to pick winners and losers in this market. There's going to be too much froth to decide who's going to win and who's going to lose. You need to pick high quality indexes and high quality stocks to layer into those indexes to really come out. The market has drawn down so much that you buying an index can absolutely provide a tremendous amount of wealth going into the next 10 or 15 years. You do not have to pick individual winners here. You need to pick baskets of quality companies that are going to be here forever. As always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors. Peace.